Okay, let's unpack this. Today we're taking a deep dive into something that, well, frankly, some people have maybe dismissed or even, called a scam.
Right.
But our sources, the ones we've been looking through, they suggest it's actually something pretty foundational, a revolution maybe, in banking infrastructure, the metal ecosystem. So our mission here is really to cut through that noise and show you why this development is seen as so important in finance right now. We'll lay out the evidence that honestly counters any idea that this is just unresearched hype.
Yeah.
You're basically about to get a shortcut to being well-informed on something that's seeing, well, real-world use and has some major institutional players involved.
I think it's really compelling when you look at the sources is just the amount of tangible institutional backing and the deep tech development that seems to support the claims for metal.
Right.
It really contrasts with the skepticism you often get around new financial tech, doesn't it?
It does.
So to give you that full picture, we're going to look at the actual adoption, unpack some key partnerships, explore how it plugs into official systems, and dig into the specialized tech behind it all. This deep dive should give you a really clear view.
Okay, so let's cut straight to what's happening right now on the ground. Not just concepts or future plans.
Yeah, the practical stuff.
Exactly. Our sources are showing 12 credit unions are already live in a stablecoin pilot. Now, a stablecoin pilot, for anyone maybe wondering, it just means they're testing digital currencies tied to something stable, like the US dollar, for real banking tasks.
Actual transactions?
Yes. And within this pilot, these credit unions, they're actively testing things like member-to-member transfers, internal settlement, which is basically how a bank clears transactions inside its own walls efficiently, and, this is crucial, interoperability across core banking systems.
So getting different systems to talk to each other?
Precisely. Making sure different bank software can communicate via metal. This isn't theory, It's live testing by institutions inside what they call the Metallicus sandbox environment.
And that's really the key point, isn't it? When you connect this to the bigger picture of traditional finance, having a dozen regulated financial institutions actually doing this, it marks a real shift.
Yeah.
It's a concrete move away from just talking about it towards practical real-world use. And it's not just about making things faster. It's about a future where these core banking functions, settlement, interoperability could be way more efficient, transparent, maybe even cheaper.
So they see a real foundational change coming.
It certainly suggests they do. They see this tech enabling that shift.
And it's not just, single institutions dipping their toes in, which is already pretty interesting.
Right.
This deep dive also points to some really significant collaborations. We're talking partnerships with the GoWest Credit Union Association. They represent over 300 credit unions, and DaLand CUSO.
Okay, and a CUSO.
Right, a CUSO, Credit Union Service Organization. It's basically an entity owned by credit unions to provide services, often tech solutions, back to other credit unions. So these aren't small outfits.
No, established players.
Exactly. Established, regulated financial groups actively getting ready for what they're calling the next generation of settlement rails, which just means the digital plumbing for moving money between banks, ideally faster and cheaper.
And the implications of those specific partnerships, well, they're quite profound. When big associations like GoWest, speaking for hundreds of credit unions, align with a new tech like this, it really suggests a strategic commitment. They're exploring, probably planning to implement new solutions for their members. It's not just playing around. They're looking for solid, forward-looking ways to improve efficiency, compliance, the whole member experience.
So it shows a proactive mindset in established finance.
Exactly. They're not just reacting, they're looking ahead.
Okay, now, for something that I think really underlines the legitimacy here and the strategic positioning of metal blockchain, its integration with Fednow.
Fednow, yes.
So for anyone not familiar, Fednow is the U.S. government's official system for real-time payments, instant payments across the country.
A major piece of infrastructure.
Huge. And our sources confirm metal blockchain is already integrated with Fednow. It's currently going through final validation for full readiness. And they've built this under really strict security and resiliency standards. What kind of hurdles, compliance-wise, does a project face connecting to something like Fednow?
Oh, that's a critical question because integrating with a system like Fednow isn't trivial. It involves incredibly tough due diligence, audits, layers of compliance checks.
Right.
It's not just a technical link, it's a deep regulatory vetting. So the fact that metal blockchain has gotten this far It directly tackles those questions around trust, security, long-term viability.
So it's not just another blockchain project.
Not at all. It positions Metal as potentially a core piece of the U.S. digital payment system. It's moving this kind of tech from the fringes right into the heart of finance.
Okay, so what's actually powering all this? The institutional adoption, the Fednow integration. Let's talk about the tech. The high-performance banking tech that our sources say is at the core of the Metal ecosystem.
Right, the engine behind it.
Yeah, because this explains a lot of the why institutions are interested. Our sources mention PulseVM. It's described as a high-performance virtual machine, but specifically optimized for banking and stablecoin workloads. How is that different from a general VM? What are those optimizations?
Well, what makes PulseVM unique is that it's purpose-built. A general VM, like the kind used for the tons of different apps, isn't really designed for the specific, very demanding needs of financial transactions.
Makes sense.
PulseVM, though, it's optimized for things like predictable transaction finality, knowing when a transaction is truly done, high throughput for payments, enhanced security features crucial for handling financial data, and it supports something called contract lifecycle validation.
Okay, what's that mean for a bank?
For banks, that means ensuring digital contracts, like smart contracts, can be thoroughly audited, version-controlled, tracked, and kept compliant through their entire lifespan. That's absolutely vital for meeting regulations.
Got it. That makes perfect sense. And then there's A-Chain. Our sources say it's Rust-based, production-ready, and tailored for institutional-grade execution. Why Rust? Why is that language a good choice for banks and credit unions? What's the advantage?
Rust is actually a fascinating choice here. It offers some unique benefits, especially around performance and safety. It's known for memory safety features that help prevent common programming bugs that could create vulnerabilities.
Which is huge in banking.
Absolutely huge. Plus, Rust performs really well, which you need for the sheer volume and speed of financial transactions. So, A-Chain being built in Rust signals it's designed for stability, security, and the kind of heavy-duty performance institutions demand. It's a step beyond typical blockchain applications.
Okay. And finally, there's a really crucial piece that kind of pulls this all together. Metal's approach to regulation and policy seems very deliberate. Our sources point to clear momentum in U.S. policy, things like the Genius Act and the Clarity Act. Both signal Washington is looking to align with and clarify rules for blockchain.
Right, providing some structure.
Yeah, the Genius Act looks at how blockchain might improve government services, while the Clarity Act tries to bring certainty for digital assets. And Metal CEO Marshall Hayner, he really emphasizes the company's decade-long work in compliance, from early crypto advocacy to building what they call the most advanced, regulatory-compliant blockchain banking stack.
And the Made in the USA aspect ties into that too.
Exactly. Our sources mention that as part of this legitimacy push in aligning with U.S. policy goals.
You know, that decade-long focus on compliance really does stand out. In this space where regulations are evolving, sometimes uncertain, Metal's proactive approach, building compliance in from day one, it positions them as a leader, not just someone reacting to rules after the fact. And that kind of foresight, that engagement with regulators, it builds enormous trust for the banks and credit unions. They just can't afford to operate in regulatory gray areas.
It really is about real-time institutional adoption, not just hype.
It certainly looks that way, not just speculation.
So wrapping this up, what does all this mean for you listening? Our deep dive into the Metal ecosystem, based on these sources, it really lays out a clear story. Significant institutional adoption, strategic partnerships, integration with official systems like Fednow, purpose-built tech.
And that strong commitment to regulatory compliance.
Right. And based on these facts, these insights we've uncovered, the whole idea of Metal being some kind of scam, well, it's not just refuted, it's pretty definitively dismantled by the evidence in our source material.
Yeah, the data points elsewhere. And this deep dive into Metal, it does raise an important question for you to maybe think about. If we are seeing this clear shift where traditional regulated financial institutions are actively adopting and integrating blockchain for their core operations for settlement, well, how might that actually change your everyday banking experience in the near future? And what new possibilities does that open up? Maybe faster, more secure, more transparent finance for everyone. It's definitely a space worth keeping an eye on.